In this video, I'm gonna explain why every single family needs to own one small multifamily apartment. If you bought one small multifamily asset this year, it will truly be transformative. As my wife and partner here, when we bought our first 7-unit apartment deal, it truly changed our life. I wanna push people, start with single family, but you wanna get into owning small multifamily. That should be your end goal to end up into, and truly one deal can be transformative.
If you are not a business owner or an entrepreneur and you just work a W-2 job, I think you need to start with single family. So there's not much risk to owning a single family home because it's easy to resell. It's easy to put a tenant in there, and if you're like, this isn't for me, then you can sell the property and move on. Owning real estate is owning a business. So if you have no business background, that's a lot to jump into just going into a 7-unit.
This is true. It's business debt versus personal debt.
But then when you go to multifamily, they want to know your real estate experience.
So many people reach out to us like, I just want multifamily. I want 50 units. My first deal ever. We're pushing you. If you're gonna do it, start with small multifamily, but they're asking more and more about track record.
If you don't even own your own house, that's an issue. Or if you don't own real estate, they say, what business do you own? So that's why I say, like, don't just jump right into it if you have no business experience whatsoever.
But now let's get to the multifamily. This came up on the MLS. Here's another thing we want to stress on. Start on the MLS. So this was before you were even an agent. That 7-unit in Northville, Michigan came up. We jumped on it. Remember, it was listed for $550,000. Who was it owned by?
It was owned by 3 people.
They used an agent.
Yeah, to list it.
Those go to the MLS. That agent who was selling that 7-unit, she was like, okay, do they have the money?
Again, everyone wants the most out of their property. And I've just seen off market.
It's off market for a reason.
Yeah, the seller is being difficult. So do you want to deal with a difficult seller or just go with somebody that's ready to sell?
When it's on the market, you know it's ready to sell. It's being marketed, it's available, it's out there. So it was listed for $550. Do you remember what we paid?
$660.
So I overpaid to do the deal. A lot of people struggle with buying real estate today because they're looking for these home run deals. They want a 30% discount.
If the agent priced it, they priced it appropriately. Unless there's something major wrong with it, you're not going to just get this crazy discount.
You're going to be discarded. It's real estate. We say this over and over. There are more people who want to own real estate than there is physical product available. We are 4 million houses short in America right now to match the supply. It's supply and demand. Supply dictates price. So I overpaid to do this deal. We put $132,000 down. Did we raise capital on that deal?
No, we did not.
Built a business first, saved our money, lived significantly below our means, and put money down. Did we take an investor on a 100-unit deal? Yes, because we had such a track record investing our own money that we felt confident enough to take on a silent investor on one deal. I'm a big believer in pushing you guys. Start small. You got to get in where you can fit it. Dude, buy a 7-unit on your own. $132,000, guys. That is not that much money. Put $132,000 out from our business that we live below our means. What did we immediately do? We took a tax write-off.
So first I was a real estate agent and then got my broker's license. But before that, I didn't have any license. But because I spent 750 hours a year doing things real estate related, I just had to keep a log of that. From being a teacher and having to document literally everything I did, it really helped to translate to here to document everything I do. So if ever we were to be audited for that real estate professional, we had documentation that I spent that much time doing it, and that's all it took.
That's not a license.
No, so then once I got my license, I did not have to track anymore. And I don't say like to just go get your real estate license, but at the same time, you can get it and then it can also help you get into properties sooner and things like that. If you're a serious investor and you're buying multiple properties, it doesn't hurt because then you don't have to track those hours. That negates the real estate professional.
There are 4 ways to build wealth with real estate. Cash flow is one of them. That's the one that everyone obsesses about. To us, that's the cherry on top of the sundae. The meat and the potatoes of it is appreciation and debt payoff by the resident. Depreciation is a huge thing, tax benefits. And the bigger the property, the bigger the tax benefits. So when we bought this property, it's a multifamily asset, it's a business, we were able to do a cost segregation study, take over $100,000 in depreciation year 1. Since she's a real estate professional, we were able to take that depreciation against our earned income. So we put $132,000 down to buy the deal, we get a $100,000 tax credit. So we put $32,000 down because we got this massive wash the deck from the IRS for owning real estate. So that's why, again, pushing you guys to make money, protect money, then invest money. Real estate is designed to save you money on taxes and long-term wealth creation. Then the cash flow is this cherry on top of the sundae. Don't focus on the cherry, look at the sundae. Well, who needs tax write-offs? People who make good money. So make more money, then put your money into real estate for tax benefits. That's like the big thing. A lot of people want to quit their job to go buy one property.
The clients that I have are the most successful are the ones that keep their W-2 job. And again, you don't have to be this business owner that's making millions of dollars. One of my clients, he's an engineer and he's 28, I believe. He has 4 single family homes and then he bought a duplex in his house hacking. He buys 1 house a year. And so by the time he's 30, he wants to sell those and go into multifamily.
There you go.
But he's gonna have so much equity in that first home because he bought in good areas and he's single and he's lived in each one of them.
Start small, then be able to trade it up and get in where you fit in. The goal should be to end in multifamily.
Right.
All that depreciation he took from those single families, he uses a 1031 exchange, buys this multifamily, now he gets a whole new depreciation schedule.
Yeah.
One of the reasons why you want to get into a multifamily, small multifamily though, is how's a 1 to 4 unit value?
Just on comparable sales.
How's multifamily valued? Based on your NOI. NOI is income minus expenses. I was just on a podcast right before this interview. He's like, how do you guys increase the NOI so much, but you're not major flippers? How do we do it? A secret weapon. This person. She's very good at managing a budget. If you are a real estate investor and own multifamily, it's about controlling expenses. That's how she improves properties tremendously. We're not talking about like we did these crazy renovations.
Yeah, I think the biggest thing is just following your lease. There's a lease for a reason. Think about all these other companies that are out there for property management. Okay, we have DTE bills, we have consumer bills. Why then do we have to eat that cost?
Right.
Number one. And then number two, the time it takes our managers to do certain things. So there's like a fee associated with it, violation fees. If you're not enforcing that, it kind of backfires altogether. So we collect on everything that we do. Another big one is insurance. So all tenants have to have renters insurance. If they don't, they have to pay a fee. If something happens to their property, it comes back on us. All of this is to protect the tenants and to protect us.
We were talking about fee management, imposing, because when you buy these smaller properties from mom and pop,
They don't do any of that.
no fees. So by adding fees on, number one, she's getting better tenants. When you don't have vacancy, you're not losing money, so you're making more money. You're not paying leasing costs, you're not paying marketing costs, all boost your NOI. Adding in these little fees significantly adds up to where if you added $100 of fees for 10 units, $1,200 in new NOI times 12 months, that's $14,400 in new NOI divided by, let's say it's a 6% cap rate, that's $240,000 in valuation just by charging $100 in fees every month for things that should be billed back anyways.
Right. Again, we just get like hit with those so much on all these other companies, but they do it for a reason. They do it because I have to pay an admin to do this. So I have to pay it because gas went up. So they're needed.
So it's about operational management.
Correct.
What about like smart renovation? How do you know not to over improve a property?
So you want to look at the comparables in the area. You never want to over improve for the area. Like our Harrison Township deal is such a good example of this. It looks like the 1990s in there. It really fits the area, but someone might go in there and be like, we need granite, we need white cabinets, we need the lighter floors, but you don't need that over there. But now when you go to Birmingham, it's the granite countertops, it's the soft closed cabinets. So you want to look at the area and make sure you're not over improving for the area.
12 unit deal she's talking about, we paid $1 million for it, appraised for over 1.3 million. That was another 100% cash out refinance.
Yeah.
Don't over improve the property. That's where a new investor struggles. You're running a business. You got to run into your business plan. That's how we're able to refinance properties without massive capital investments. The appraiser doesn't ask how you got to the NOI. They just say, what's the NOI?
You want to maybe test on one and say like, do we need to keep doing this? Was this necessary to fill the unit?
Huge value add there. So start with one unit, don't over improve it, test it, and then assess, look at your numbers, look at your data, and drive it. So what we were able to do in that first year, we took the NOI from 35,000 to 60,000. 60,000 divided by 0.06 was the cap rate. That property appraised for $1 million. So remember, I paid $660 for it. Year later, building appraised for $1 million. It's valued based on income it generates. So what Andrea just explained is how we were able to get there. I go back to the bank and say, hey, my building's worth $1 million. I want to do a cash out refinance. So they said, okay, let's have it appraised. Wow, it appraised at $1 million. Congratulations. We'll do a 75% loan to value cash out. You can't go do a refinance if the deal doesn't cash flow. So we left 75% in that deal. $750,000 was our new debt. We paid off the old loan and we walked away with $250,000. We've proven this now. We did a full cycle burr. Now we know we can repeat it. We took the money from the refinance refinance it, we reinvested it. So that's the power of multifamily investing. That's why I'm pushing you guys to do this. This is simple. Bought a business for $660,000, making $35,000 a year. That business a year later, from strategic operations and light value add and testing the market, being intelligent, that business made $60,000. That business was reappraised at $1 million. We were able to pay off the old debt, take $250,000 tax-free. Why is it tax-free? Because it's debt, and debt is not taxed. Do we pay that loan back?
No.
Who pays the loan back?
Property pays it back.
The property pays it back. Also why I'm pushing you guys to do multifamily, because single family homes, 1 to 4 unit, it's personal debt. It goes on your personal credit report. This business was bought in an LLC. The debt was in an LLC. It does not show up on our personal credit. Even when we refinanced it, it does not show up on our personal credit. Now we get the cash flow, we get the tax benefits, we got the $250,000, but it's not personal debt, and we do not pay that money back. The property pays that money back because we didn't over leverage it. I challenge you right now. What would $250,000 do for you and your family? Would that change their life?
Yeah.
It would be transformative. If we can do this, so can you. And that's why I talk about this deal over and over, because sure, the 100 units sexy, but 7 units, it's not super sexy, but it's super achievable. It's super conceivable, and nothing we explained here, you can't do. If you work a 9 to 5, you can do this. If you're an entrepreneur, you can do this. It was not that complicated. So I'm pushing you to do this. I want to challenge you to buy one small multifamily deal, because I know it will change your life. That deal was the inception for us to go and do what we're doing now on our path to 1,000 units. So a couple key things for you. If you enjoyed this episode, let us know, leave a comment below. If you have any questions about anything we talked about, drop a comment below. I want to give you some free resources to get started. Give my full masterclass. That was an hour-long training. I actually go way more in depth into this deal. Click the link below, grab my book that sells for $19 on Amazon, get it for free. Get my multifamily due diligence checklist. If they want to invest in multifamily real estate in one of the best markets in the country right now, Metro Detroit, how do they get a hold of Stephan Group Brokerage?
Our website, stephangrouprealestate.com, would be the best spot. You can DM me too on Instagram at Andrea Stephan.
And if you're looking for coaching, if you're looking for mentorship, click the link below to fill out the application for my mentorship program, or just DM me the word mentor on Instagram. Love to talk to you more about your goals, see if I can add value to you. Until next time, thanks for watching. Talk soon.